Hey, technical investors, it's Thursday, October 14th with our weekly investor report. And as you can see here, we got the weekly chart of the SPY ETF. And you can see when we've got green bars, we are in an uptrend and long the markets. When it's red, we are either in cash or potentially long bonds. And we're up pretty significant from the post-COVID crash and kind of stabilization of the market. And we continue to march our way higher. Now, if we were to zoom in, you can see here we've had a little bit of a rounding formation. It's trying to form a little bit of a pause or pullback here. It's on the verge of popping and starting a pretty big run, I think, to the upside. Based on our cycles, we are projecting forward here that the market could rally into the very end of January, the last couple of days of January going forward. So there's quite a bit of upside potential in this market. If we were to actually take a look at the daily chart and some of our cycles, this is the SP 500 just this summer here. And we've seen this recent sell-off in September. And we've gone from an uptrend with cycle lows to now we are in a downtrend, which you can see here, these red bars, this red shaded area. And more or less we have cycle high, another cycle high. Today we're pushing up and testing a cycle high as well. With that being said, it looks like our major intermediate cycles here have bottomed. We've had a series of lower highs on the shorter term cycles, and now today we're popping and pushing up and breaking through that level. And if we were to take a look or just draw a line across these highs here, we are more or less starting to break through a neckline. You've got a shoulder, you've got a head, you've got a shoulder, you've got this neckline. And so the market here is starting to break out. Now we haven't broken this previous high yet. But we are seeing higher lows and higher highs on the short-term cycles. So that is their first indicator that we're starting to break out or change direction to an uptrend. We're starting to test and break through the neckline. And our projected cycles, our short-term cycle and the intermediate cycle, are projected to move up here to the end of December, December 28th, December 29th, somewhere in there, October 27th, 28th, 29th. So it is telling us that it's not going to go straight up. This is just an average price of where the cycles, the bias should be going, the trend. So it's carving out a bottom here. We haven't really kicked back into an uptrend just yet, but more or less this market is primed and ready. Now we have seen a big gap today in price. Gaps tend to get filled. And just like we saw over here, we had a huge gap up and a big rally. By the end of the day, the market had sold back down to the opening price, and then it came all the way down to fill this price gap. I wouldn't be surprised if we see something like that again over the next couple of trading sessions. Maybe the market pushes a bit higher, but it will most likely come back down and fill this gap. If we were to just zoom in a little bit, you can see there is a fairly decent gap between the closing price and the open today. Here was the other gap that got filled right here. And gaps tend to get filled. There was a huge gap here. And of course, the market came up, filled that gap as well. And then there was a big gap down here. And the market continued to sell off, came all the way back up, and then filled the gap with this intraday wick here, ran up, filled the gap, and then sold down. So gaps are really important on the charts. They're very important levels that tend to get filled. So if you gap up with strength, just know that that strength is usually going to be short-lived and probably going to see the price chop back down to fill this gap window going forward. Now let's take a look. Let's just zoom back out on the charts. Last time we had a cycle low were multiple cycles. Now these are all blended of different time frames, different cycles. When you have multiple cycles bottoming at the same time, it will pull the major cycle down. And when it gets to the lower end, it can be a very strong intermediate trend that can last a long time. Last time we had this was back in last September, actually. The exact same month, very similar type of price action. And then we've had a big rally from there. So this is a pretty big cycle, and looks like we're starting to see a projected upward move here. Maybe it's going to chop around still for another month or so, but overall the bias should be going to the upside going forward. We also saw a cycle down here where they all bottomed back over after COVID, which more or less forced the cycles to kind of reset and go down. But you can see when all the cycles are compressed and in the lower range, they cluster down here and eventually get some really strong, powerful moves that'll reset the market for another run. So if we were to just look at the market here that's unfolding, you can see how these trends here, when you go from a cycle up to a cycle top, you get these very strong moves in the market, and we are starting to see the next one potentially unfold and go a lot higher. Now, if we were to take a look at the IWM, which is the Russell 2000, Russell 2000 had huge run, consolidated for a few months, had the second half of the run, and now it's been flat all year. This is a very strong pattern. The longer something trades, especially in the tighter range that it's in, it can be very explosive to the upside. And really, you can see it's moving up nicely today. We can grab this pattern here. Based on this pattern, there's a lot of upside potential here in the IWM. We could see potentially from where it is today, we could see a 30% move to the upside. And of course, that could, for all we know, that could be a big holiday rally here. We've got October, November, and December. We've got 3 months. 3 months, a lot can happen. We've seen this, the Russell 2000 over a 3-month window. We have seen it run 1, 2, 3. We've seen it run 40% in less than 3 months before, and that could happen again. And if that happens, we're going to see pretty much most stocks across the board take off. Probably see a lot of sectors do exceptionally well also. And that's what we focus on with the TIBT strategy and the band sector strategy. They both hone in on trying to catch these explosive moves in some unique ways and trying to catch the hottest sectors that can jump 40, 50, 100% in some of these rallies. So this has been a dull year, but the sectors and indexes are about to pop, I think, and rally in a big way. Now, if they break down, we're going to see a very big move down, which is why we have position management and why you're using the technical investor and other services so that you do not ride those down. In fact, we can generate quite a bit of income if we get the proper setup when the market rolls over. So not only do we avoid it, but we actually make money while everyone else is going negative on their accounts. Anyways, hopefully that gives you some insight into the markets. Again, long-term trend is up. We're on the verge of popping and starting another multi-month rally to the upside. Could be very explosive, and we just got to let the market do what it's going to do. And we take it one bar at a time. In this case, for investing, it's 1 week at a time. Take care. Bye-bye.